Hello and welcome. You're watching Taking Stock, the show where we take stock of the week gone by. I'm Surabhi Upadhyay and with me is Lata Venkatesh. Hi Lata. Another rocky week for the Bulls, at least. No relief in sight. And again, underperformance by India compared to the rest of the world.
That's the first problem, that although the global markets could, cross over the hump of the trade war, the Indian markets, the Nifty, for instance, is down 2.2% for the week. But I would still call that a moderate loss. I think the big loss has really come from the banking and the metal space. So the metal space clearly reflects the global concern, but it's getting compounded in India because of the way in which PSU banks have fallen. That's a 5.5% fall. I think we have to now get over the fact that this is fraud-related fall in the banks. Banks are dragging, also, although they have got support from the bond markets. At least on Friday, you saw a bit of recovery in the bond market. So now it is hitting home well and proper that it is the Reserve Bank's circular on NPA resolution that's going to create elevated levels of NPA recognition and therefore provisioning, and the markets are worrying about therefore power sector loans, and therefore even the BSE PSU index is beginning to show a lot of pain. And if a large part of the market doesn't lend, then it can have repercussions on other sectors as well, which is why you're perhaps seeing that the Nifty is underperforming.
Absolutely. We saw plenty of news and additional news, particularly from the Power Minister and banks like State Bank of India, referring to some of those stress points. On that note, let's get you some market opinion that we got through the course of the week.
I think it's a technical play which is coming into where investors, whoever is sitting on good profits in sectors which have done well over the last 12, 18 months, they kind of, now that you expect 2018 to be more of a volatile year, wanting to take money off the table at every given opportunity. Interest rates are hardening, and so there could be a impact on valuations. So you could possibly see next 2, 3, 4 quarters that earnings are panning out as per expectations.
The Indian earnings recovery and the economic recovery seems to be finally starting to move in the right direction, with all of the challenges of the last 12 to 15 months now in the rearview mirror. I think we're, fundamentally more optimistic about India, including the bad loan situation, but the political situation in India also, notwithstanding the Northeast results, is going to be challenging this year because of concerns about, what the tea leaves are reading for the 2019 Lok Sabha election. So I think those are some of the reasons why the markets are probably, even in India, not likely to see any kind of a V-shaped recovery and likely to remain somewhat range-bound.
Well, that was some opinion that we picked up. If there was one silver lining, Lata, I thought in the week gone by, it was the fact that at least investors, local investors, seem to be still keeping the faith in the market. So the February inflow number that we got from domestic mutual funds, that was heartening. There's actually about a 5% increase over the Jan inflows. We've crossed 16,000 crores this time around. It's, of course, still a far cry from the November 17 peak of 20,000 plus. But the fact that with the market volatility, concerns around LTCG, etc., despite all of that, SIPs have been drawing in the money, overall equity funds have been drawing in the money. So this was very, very heartening. The only concern is on balance funds, because that number has come down quite substantially, about a 35% dip over the January number. But a lot of experts say that was expected because now there is a tax on dividends. So perhaps balance funds are a bit of an issue right now. But overall SIP money, the long-term sticky money, retail money is still coming in. So some positives over there.
Oh yeah, certainly. And considering that February is a shorter month, 3-4 days less,
Absolutely.
3 days less than January's 31 days, you could probably say actually MF inflows are up by maybe 7%, to bring it like to like. But maybe we should ask the expert and invite him now, joining us on the show to discuss the week gone by and the weeks that will be, is Gautam Chowcharia of UBS Securities. Gautam, thank you very much for joining us. Well, first assess for us India's underperformance in the week gone by. We saw other Asian EMs as well as developed markets cross over the trade war hump, but we underperformed.
So not a surprise given where the starting point was for India in the context of valuations, and also the narrative around few points not helping India. Some of them we were mentioning earlier, but stuff like rising rates, inflation, the Punjab National Bank scam, So all these issues are adding up and hurting the India's narrative. And therefore, India's underperformance is not necessarily a surprise. It also look at the perspective that India is already an overweight market for many investors. They have trimmed their overweight on India, but still remains an overweight market. So the incremental flows which emerging markets are getting globally, India is not getting the similar level of flows in proportion as it used to earlier, because investors are also getting opportunities in other markets because of the recovery they have seen over the last year and a half. And that's where the relative valuations also come into play, and which is what one of the reasons why our global strategies like emerging market strategies and APAC strategists remain neutral on India for the last few months.
No, well, before I let Surabhi take over, Gautam, the valuations argument was even more against India in November and December and January. But we performed with the world and better. Is it now that the future course of either earnings or multiples is looking less attractive in India than the India story looked in, say, Jan or December?
So it all adds up over time. One of the best things about India for the last 3-4 years, or two best things, has been one, the relative story. The rest of the emerging market world till a year back didn't look promising. Investors had worries, so India looked promising in that context. Secondly, despite India missing out on earnings, not just over last year, but even over the last 3-4 years, India has seen continued earnings cuts. But markets have done well because the narrative was very, very good. The narrative around reforms, declining rates, inflation, oil, current account, and specifically Mr. Modi's government and the reforms agenda. Now finally we're seeing some chinks emerge in this narrative, which is coming at a wrong time for India.
Okay. Gautam, good evening. I want to talk to you about this non-stop selling that we are getting in financials now in India. Even this week, the PSU index down 5.5%, but even other banks, I mean, ICICI Bank, Axis Bank have really been sort of taking it on the chin. What have you made of the bank selling, and do you think there's more of it?
So difficult to say more of it, but clearly there's nervousness building up post the PNB scam. Whether this could lead to further NPLs in these banks, linked to that scam per se, and also in general, if there are more negative surprises ahead. So banks are also, bank stocks and investing is also about confidence in how they deliver. And that confidence has obviously taken a hit. And secondly, the RBI's measure in terms of acknowledging all NPLs faster than usual is also at the margin worrying for many investors. From our recommendation perspective, we retain our positive bias for corporate lenders. I can't name individual stock, but corporate private banks, we still remain positive. The SOE banks, we remain neutral from a portfolio positioning perspective. We only have one individual SOE bank on a buy rating. The rest of them are neutral or sell. So SOE banks are still early days to get in. We need much more clarity on the bank's governance and reforms, specifically after the PNB scam. So the recap trade was promising earlier, but now post PNB, the investors would look for further clarity or more clarity on reforms and governance going ahead than just a recalculation of balance sheets.
Okay, actually your year-end target, your report says, is only 10,500. So not a great distance from here. Any guesses on how much we can lose?
Tough to say. It also depends on what happens globally, but locally the only factor to track would be the view around elections in 19, the national elections, or if they get preponed then later this year. Because when we talk to investors over the last few months, almost all, or at least a big majority of investors do presume that Mr. Modi is going to come back next year in the elections, and that's one of the reasons why investors have remained positive on India, because that's give them hope about maintaining current multiples. So if that narrative or that hope starts changing this year, then that could be a risk for Indian multiples. Otherwise, I don't think Indian markets will necessarily underperform in a major way. All the points we mentioned are small near-term chinks. Even earnings misses or earnings cuts, like we expect top-down for this year, may not matter so much for markets. What would matter is the outlook or narrative over the next 2-3 years, and for which the next year election becomes super critical.
Okay. Gautam, the other sort of talk point this week obviously has been the tariff wars and what happens next. And we saw the way that played out on metal stocks in particular. Do you see this as a passing? Okay, I don't think we immediately have Gautam with us. So perhaps on that note, we can take a quick break. We will come back and resume our conversation. And of course, don't forget, we also answer your queries live on the show. So that's also coming up in just a moment. Welcome back. Well, we also have Ashwini Gujral joining in the conversation now. Let's get Ashwini's take on how we can expect things to play out given the volatility on Friday and, of course, the week overall. Ashwini, what did you think of this 2.5% decline on the index? What's the advice for Monday?
See, it's very clear that the pullback is extremely weak, and even if we don't go and make fresh lows immediately, chances are fresh lows are coming. So now the problem is everything is going and participating on the downside. Today even IT came off substantially. So now there is fairly little saving grace or white nights as we had earlier. So chances of bigger falls increase as you get to the end of a downtrend, like as we got to the end of an uptrend. The rises were fairly strong. Now I think the next phase of the decline will be fairly gut-wrenching, and for a moment of time it should break 10,000, because that will make all the last bulls throw in the towel, and only then the market will bottom out. Till now it's lots of bravado, this was a correction you were looking for, put more money, etc. I think the moment you get into four figures, a lot of that will go, and then you will see the bottom. And as many people have said, this will be a tough year, so you have to play on both sides.
So, Ashwini, would you say get into cash now?
Well, if you're an investor and you came in at 8,000, then there's no problem. If you came in at 11,000, then you are already losing a whole lot, and maybe getting into cash at least 50% may not be a bad idea, and deploy that 50% at 9,800. See, the problem is only for people who got sucked in at the end. For people who came during demon, they should be fine. If you are an ETF in mutual funds, if you are putting in $100, put 200, 250 right now. Why? Because you put in money when prices are lower. Most of the people could be in that category. So you buy more units of the ETF at lower price, or the mutual fund at lower price, than you buy at higher prices. The market still has some way to go, 300-400 points, and maybe if you put in 25% every 100 points, etc., somewhere your average is 10,000. I don't think you'll do too badly.
Okay, Ashwini, trading ideas for Monday then?
So it's clear that metals have started some sort of new downtrend. So Tata Steel is a sell with a stop of 625, target of 590. ICICI Bank came off sharply, whereas other private sector banks kind of held on. So this is a sell with a stop of 300, target of 275. And Jubilant Food is a buy with a stop of 2000, target of 2150. I think metals and the banks which lend to those metal companies, chances are both could fall together. So another leg of the downside on financials may open up because of metals.
Okay, there are questions coming your way, Ashwini, and Kushal Das has 500 shares of TVS Motors. He says he purchased them at 703 rupees. Can hold for a month. Wants to know if he should book losses, or actually average.
See, another month, nothing will change. Another year, maybe you should average down and then hold on. Motorcycles in this country, I don't think you can go wrong with that. And there's no point buying something at a high price and then selling it when it loses $100. My advice is, don't try to be a trader if you are not. And there's a good chance you are not. If you average down, maybe at some point market goes back to 10,500, 11,000, you'll get the highs on the stock back. So if I were you, I would average the stock and then wait for upside.
Okay, all right, that's TVS Motors. Now, one of the big highlights of the week was banks raising the red flag on the power sector. In fact, we have a couple of queries on financials coming in. Before we take up those questions, let's listen in to what the biggest banker of the country, Mr. Rajneesh Kumar, had to say on the issues that lie ahead. He says that long-term power purchase agreements are a problem for the sector.
It is not SBI. It is SBI on behalf of all the lenders to these three power plants where the litigation is going on and went on. There is only one problem. And the problem is around long-term PPAs, where in the last 2 years, there is hardly any long-term PPA. And what we have been submitting from lenders' perspective or from otherwise a sound advice also, that it is not the right strategy for DISCOMs to rely solely on the short-term PPAs. Long-term PPAs are in fact in their own interest.
Yep. Well, that point is well taken, but the issue is that neither are long-term PPAs being signed nor are prices being raised. The promise of Uday was that tariffs would be raised along with the cost of raw materials. Okay, so that's hurting the lenders because power plants don't find consumers. Well, we have questions coming on broadly banks and power financiers. Chhatrasal has 600 shares of Union Bank purchased at 107 rupees. He says he can hold on for 2 to 3 months. What should he do? Union Bank today at 93, so the gentleman is sitting on a goodish bit of losses. Ashwini?
Well, it's come down a lot from 195 to 107 or whatever, 95. Now the issue is if we get something like a recap again or, some strategic move by the government, he can easily get, back to 150, 160. It's a hated sector for good reason, but the problems are structural. Till you have structural solutions, I don't think, they'll rally a whole lot. As we saw today, Canara Bank falls another 6%. So if you are willing to wait for that day to come, then it's a different issue. But otherwise, you should get out because there are no easy solutions and the solutions may not come in a hurry.
Fair point. Okay.
Okay, one more question related actually. Avinash Patra has 250 shares of REC. Now he's also suffering a loss. His buy price is 137. He's saying he can hold on the stock for a while. But the question is it worthwhile doing that? Ashwini, what would you say? Right now, nursing a small loss on REC.
See, PSU financials, nobody knows what's going on there. Financials in general are going to have a bad year. PSU financials will have an even worse year. So if you have to be into something, some financial, at least be in an HDFC bank or HDFC, they'll keep you safe. But if you want to make money, I think it's still a good idea to buy into tech stocks, mid-cap IT, Mindtree, Sonata, Hexaware, whatever you want to buy, NIT Tech. Those are good ideas. People have to understand financials was the story last 2 years. Now that game is up for a while.
Okay, point taken. You have to change strategy. That's the advice coming in from Ashwini. The other set of stocks that have been doing rather badly have been the sugar stocks, as record output was announced by the Indian Sugar Mills Association and a forecast for an even better year in the next sugar year starting October. Now here's a question on Balrampur Chini from Varun. He says he has 1400 shares and he bought them at 170 rupees. Can have patience for another 2 to 3 years. Well, what should he do, Ashwini?
See, I've been trying to explain the sugar cycle for the last 1 year. What will happen in 3 years? He'll get 170 back. So maybe, call it tuition or whatever, you buy it at the high of the cycle and, that's what happens. I think some people may have caught the high of the metal cycle also. So commodities you have to buy when, there is these guys are going bankrupt, they can't fund their bank loans, etc., etc., etc. Not when they are planning to open NBFCs. I think these guys were planning to open one. So
Right.
you have to get out. The cycle is over.
Okay, we have to buy when there is fear in that space, and now that's the PSU space. But let's see whether things have to get much worse before they get better. Ashwini Gujral, thank you very much for joining us. Have a great weekend, and every one of you out there, thank you very much for watching Taking Stock.
We'll see you with the markets bright and early on Monday morning. Till then, enjoy your weekend.